Now let's get into the reversal pattern. The first one is drop base rally. So with the drop base rally, what you have is a drop in price. The price is dropping, and then there's going to be some consolidation as we saw with the other patterns, and then a strong rally. And we'll be waiting for price to come back to this demand zone for a nice buy, very high risk to reward. So whenever we see the drop base rally, that will form a demand zone. And to reiterate the logic, buyers that are buying aggressively, they want to buy at the best price. And as they buy and take out all of the offers, it pushes the price up, making them purchase from a worse price. So they want to buy at a lower price so that as price moves up higher and higher and higher, the supply that they bought down here, the shares that they bought down here, they'll have greater value, right? Because they bought them down here, and those shares, as they continue to rise, they'll rise in a greater value. So they don't want to buy everything from a higher price. They want to try to get as much as they can at a lower price. So let's look at an example. We talked about this one earlier. So price drops here. There's a base with a doji candle here, and there's a strong rally. So here, when the price returns to the zone, we will enter into a buy. And sometimes it won't be perfect, right? In this scenario, price didn't quite come into the zone. So when price actually came into the zone, there was a strong rejection. If we look at the lower time frames, which we'll talk about later, when we look at the lower time frames, we'll see enough confirmations and for us to enter into a buy. And then we will be in a high risk to reward setup, high probability setup for a nice buy to the upside. Another example is here. We have a drop. There's a base that forms. There's consolidation here. Very small candles. Consolidation is here. And then price rallies up hard, quickly. These candles are aggressive buyers here, okay? Rallies up hard. So what we'd be waiting for is price to come back to this zone, this demand zone, for a continuation higher. See, if we're only reading structure here, what we would see is price coming up high, and we would think that this is a break of structure here. So when we see the break of structure, just reading structure, we're seeing these lows, lower high, lower low, lower high, lower low being created. We may be thinking that the market is going to sell, but if we understand that this is a demand zone, then we'd be waiting for price to return to the demand zone, give us bullish signals. Here we have a bullish pin bar for an excellent entry for a high probability move to the upside, high risk to reward here. From this entry to here, excellent risk to reward. So that's our drop base rally. Here's one more example. There's a drop here. There's a drop. There's base rally. Two big giant candles to move up the market quickly. Price comes back down, not too aggressive, hits the demand zone, pushes up higher. Okay. All day long, this happens. Drop, base, rally. So put your comments and questions in the comments section. Open up your charts. Look for the drop, base, rally, starting with the 4-hour or the daily time frames. Give me your feedback in the comments section. Let's move on to the next video.